Reuters just stunned me by issuing a public correction which doesn't really correct the most important thing. They say Tesla posts record quarterly deliveries after price cuts, up 4% from Q4. An earlier tweet about Tesla's deliveries contained incorrect information. We are deleting that tweet. Earlier, Reuters said Tesla misses delivery estimates as price cuts fail to lure buyers. And then they got corrected by community notes saying this post is factually incorrect. Tesla beat projected numbers on both production and deliveries for Q1. Even Elon tweeted saying deceptive headline backfires on Reuters. As we can see, that tweet now has been deleted from Reuters. But looking at this tweet, you would think that they have corrected themselves, and now they are saying that Tesla did not miss the estimates. But I click on this link and it takes me to this article that says Tesla misses delivery estimates for the first quarter. It is certainly not as bad as the last or initial headline, but still, it's not really that accurate. I am trying to find which analysts are actually saying that Tesla did not beat the consensus. I haven't seen a single analyst yet. I'm sure there's someone out there, but I haven't found any. If you know of an analyst that thinks that Tesla missed the consensus, please leave a comment down below giving the name of that person, and then I will double check. The FactSet consensus was 432,000, but that does not have as many analysts as the company compiled consensus. And that is why, or one of the reasons why, Troy does not use that as the consensus number. It's great to look at FactSet throughout the quarter, but at the end of the quarter, you want to go with the company compiled consensus. Gary Black here also agrees that no investor uses Refinitiv data and that Reuters is making a huge mistake here. I mean, obviously, they have to use Refinitiv data because Reuters and Refinitiv, they are close partners, but at least you should mention that the company compiled consensus is different and maybe at least throw in the Bloomberg consensus, and then I wouldn't have any issues with Reuters. What I will agree with is that the retail estimates were quite a bit higher. They were at about 430 if you just round the numbers up. Wall Street was lower, and this time Wall Street was actually less wrong than retail. But retail doesn't really specialize in trading. Retail investors are better long-term investors. Wall Street is supposed to be incredibly good at short-term predictions, which deliveries, that's one of those things that they should be really good at. So it shouldn't be really a big surprise, but historically speaking, it hasn't been always the case with Tesla. Interestingly, also, Reuters deleted quotes of Gene Munster, and one reason why, perhaps, is because Gene Munster on Twitter said that Tesla did not miss estimates. It contradicted their narrative, so that was why I think they deleted Gene's quote. If you would like to read and compare, this is the original article, which was already slightly corrected, and now the article is a lot shorter. And we have more good news here. Giga Texas has just reached 4,000 weekly production in Austin. It's still a bit behind Berlin, which is really what it is supposed to be because Giga Berlin was built first and Austin was built after. So this is how things are supposed to be. But also, Austin has to deal with 4680 batteries, and that is difficult. It is also important to remember that the price cuts happened not immediately when January started, and that also created some confusion with a $7,500 tax credit in the US. These took a little while to be offered to everyone, and that certainly slowed sales. So this quarter might be significantly better. We'll have to see, but certainly that is expected. The price cuts in China happened a little bit earlier, but price cuts in a lot of other places happened later. And that, of course, cost some sales for Tesla. Elon just liked this tweet, so let's take a look. It compares how much better Q1 normally is compared to the previous quarter of Q4. And this time it's 4.3% better. Last time it was 0.5% better only, before 2.3%. And earlier, yeah, they were quite a bit worse. And back in 2019, we did not have any virus issues, so you can't blame that big mess on that. But this current quarter is going to be important. The next most important thing is really the earnings call. What are the margins? And then the next thing after that will be how many deliveries in this quarter we are going to see. I'm talking about things that matter in the relatively short term. If your investment horizon in Tesla is about 10 years, then I would be mostly concerned about full self-driving and how well the next generation vehicle lineup does. These would be much more important, and everything happening right now would be mostly just noise. But it's interesting noise. Another reason why Q2 should be quite a bit better than Q1. Q2 has more days, but also there's no Chinese New Year in Q2. Now we need to talk about the Model S and X. Most people that thought that Tesla will deliver more vehicles in Q1 missed because they thought the Model S and X would have more deliveries. But these two vehicles did not have that many deliveries this time. The production was strong, 19,500, but deliveries were only 10,500. Tesla's explanation is that we continue to transition towards a more even regional mix of vehicle builds, including Model S, X vehicles in transit to Europe, Middle East, and Africa, and Asia Pacific. Looking at the inventory in the US of the Model S and X, we see that the inventory level is sort of still elevated, especially for the Model X. The Model S is not too bad. Looking at Europe, there is some inventory as well. Although if we look at China, it is not clear exactly what's the inventory in China for Model S and X. We know that Tesla just started deliveries for these two vehicles in China, so there could potentially be more of a backlog in China. I just grabbed a zip code that would show me vehicles in London in the UK, and there are no vehicles for Model X, and for Model S, also no new vehicles. So inventory is not evenly spread out in Europe. Here's the history of a Model X pricing, and as you can see right now, we are still a little bit higher than where we were before the refresh. And Romauer says that the costs to make Model S and X have reduced after the refresh. While it does make sense that Tesla is improving its logistics for the Model S and X, also, we know when the inventory builds up a little bit more than usual, Tesla drops the prices, and Tesla certainly has quite a bit more room to drop the prices for the S and X. The deal on the Model Y right now is just too good compared to the Model X. I mean, you can get the performance version for $59,000 and the speed is really good, or you can get the Model X for about double the price. If you have the money. Not much more speed. Of course, it's going to be a little bit bigger, but the Model X has its own shortcomings. Some people don't like the doors. Some people love the doors. But also, when you try to open this door here, the driver's door, you sort of have to push it in, and sometimes it just does not work every single time. So some people love it, some people hate it. If you don't really need the Model X, then you are getting the Model Y. Because also remember, you will get the $7,500 credit, which you will not get for the Model X. So I am expecting Tesla to most likely cut the prices further for the Model S and X. Because right now, the 3 and the Y, the deals on those two are just too good. Another reason why the sales may have slowed for the S and the X, we know Tesla is working on the next generation hardware, and I think if you are buying a more expensive vehicle, you want the best version of the vehicle, so you probably don't really mind waiting for just a little bit longer, and you will probably hold off your purchase a little bit more. And Rob Maurer from Tesla Daily says that Tesla likely produced a record of 170,000 vehicles in March, which analyzes to a production rate of 2 million vehicles per year. That is good news. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.